Ray Dalio just issued his final warning to the middle class, and if you are still keeping your hard-earned savings in a traditional bank account, he believes you are making a fatal mistake. According to the billionaire founder of Bridgewater Associates, the largest hedge fund on the planet, a silent financial trap is closing on millions of families right now. The rules of money have permanently changed. The exact strategies that saved your parents and grandparents from financial ruin are the very strategies that will destroy your wealth today. We are currently living through the final stages of a 100-year economic cycle, a period where governments printed too much currency, accumulated too much debt, and reached a point of no return. Most people think inflation is just prices going up, but Ray Dalio warns it's something much more sinister. It is the value of your labor being systematically stolen from your bank account. If you do not change how you store your wealth in the next 12 months, the system will wipe you out. In this video, we break down Dalio's exact three-step formula to survive the upcoming debt supercycle, protect your family from currency devaluation, and position your portfolio to profit when the global system resets. This is not political speculation, this is pure historical mathematics. Here is how the economic machine is breaking down and exactly what you need to do right now. To understand why the middle class is in danger, we must look at how the economic engine actually works. Ray Dalio's entire investment philosophy is built on a simple truth. History repeats itself because human nature never changes. Economics is just a machine driven by simple, repetitive transactions. There are two major cycles that control your life. The short-term debt cycle, which lasts about 5 to 8 years, commonly known as the recession and expansion cycle, and the long-term debt cycle, which lasts between 75 and 100 years. During the short-term cycle, central banks lower interest rates to make borrowing cheap. People take out loans, buy houses, spend money, and the economy booms. When things get too hot and inflation rises, the central bank raises rates to cool things down. This is normal. It happens your entire life. But look closer at the chart. Every time a short-term cycle ends, interest rates never go back down to where they started, and debt accumulates. Why? Because politicians and central bankers hate pain. They prefer to inject more credit into the system to keep the party going. Over decades, this creates a massive mountain of debt that cannot possibly be repaid with real production. This is the long-term debt cycle. The last time the world reached the absolute peak of a long-term debt cycle was the late 1930s. The world was drowning in debt, interest rates hit 0%, and central banks resorted to printing massive amounts of money. What followed was a global currency crisis, social unrest, and a complete restructuring of the world order. Today, we have reached that exact same peak. Look at the numbers. The United States national debt is expanding by $1 trillion roughly every 100 days. This isn't a sustainable economy, it's a mathematical countdown. When interest rates hit near zero or rise rapidly to combat inflation while debt is high, the central bank enters a trap. They can no longer raise rates without bankrupting the government, and they can't lower rates without triggering hyperinflation. Your bank account is sitting inside this exact trap. Most people believe that if they have $50,000 sitting in a high-yield savings account, they are safe. They look at the balance and think, my wealth is secure. Ray Dalio calls this the ultimate financial illusion. The mainstream media tells you inflation is 3%, 4%, or 5%, but Dalio urges you to look at the money supply, not the manipulated consumer price index. When the government prints trillions of dollars, they don't create new wealth. They simply dilute the purchasing power of the existing dollars in circulation. Think of it this way. Imagine a company has 1 million shares of stock and you own 100,000 of them. You own 10% of the company. Now imagine the CEO suddenly prints 10 million new shares and gives them to his friends. You still own 100,000 shares, but your ownership has plummeted to less than 1%. Nothing changed about your numbers, but your power and wealth were stolen. This is exactly what central banks do to your cash. If your money is earning 4% interest in a bank, but the true devaluation of the currency is running at 8% or 10% based on the cost of assets, housing, and healthcare, you aren't saving money. You are safely losing 4% to 6% of your life's energy every single year. This is why Ray Dalio coined the famous phrase, cash is trash. Cash feels safe because it doesn't fluctuate on a daily chart like stocks or Bitcoin, but it is a guaranteed losing asset. It is an iceberg melting under your feet. In a debt crisis, governments have only three choices to handle their debts. 1. they can default on their obligations, but this causes an immediate, catastrophic depression. Politicians will never allow this because they want to be re-elected. 2, they can raise taxes drastically, but this crushes the economy and causes political revolutions. 3, they can print the money to pay the debt. Printing money is the easiest, most invisible way to default. It doesn't require a public announcement. It just silently devalues the money in your pocket while allowing the government to pay its bills with cheaper, worthless paper. Ray Dalio warns that history shows us that every single government in this position choose option 3. Every single time. We are not just experiencing an inflation problem. Ray Dalio's latest research outlines that we are witnessing a massive geopolitical shift driven by the 5 forces that govern the rise and fall of empires. The first force, as we discussed, is the debt cycle, but the second force is the internal conflict. When the gap between the ultra-wealthy and the middle class becomes too wide, social cohesion breaks down. History shows that this wealth gap leads to extreme political polarization, populism, and internal instability. Look around you today. The political division in the Western world is at its highest level since the 1930s. The third force is external conflict. When a rising power like China challenges an existing empire like the United States, the risk of economic, technological, and military conflict skyrockets. Dalio's metrics show that the economic dominance of the U.S. is shrinking, while rival blocs are moving away from Western systems. The fourth force involves acts of nature, pandemics, droughts, and climate shifts which historically disrupt supply chains and strain economies, and the fifth force is technology. The rise of artificial intelligence and advanced automation is creating the fastest productivity shift in human history, but it will also displace millions of traditional middle-class jobs, accelerating the wealth gap even further. When these 5 forces converge, a paradigm shift occurs. A paradigm shift is a period where the market and society operate completely differently from the previous 10 or 20 years. If you rely on the investment rules of the last decade, you are flying blind into a storm. You cannot protect your future by looking in the rearview mirror. So, how do you protect your family? How do you apply Ray Dalio's genius to your personal life today without having $1 million to invest? Dalio outlines a clear, 3-step execution plan for the ordinary individual. First, you must understand that your local currency is not a safe haven. If all your income, all your real estate, and all your investments are tied to one country and one currency, you have zero diversification. Dalio advises holding assets that are not dependent on a single government's printing press. This means looking at international equities, globally diversified businesses, and hard assets. Second, build an all-weather mindset. You need assets that perform well in both inflation and deflation. When governments print money, they cannot print gold, they cannot print prime real estate, and they cannot print shares of productive companies that produce essential goods. Dalio has always maintained a strategic allocation to gold and commodities because they act as timeless insurance policies against central bank incompetence. Hard assets possess intrinsic value, paper currency only possesses promises. Third, the third step is the most critical, yet the most ignored. Dalio notes that over the long run, the single most powerful force in economics is not debt or credit, it is productivity. Your ability to create value. In a world disrupted by inflation and AI, your primary protection is your personal skill set. You must become a producer, not just a consumer. Learn skills that cannot be easily automated, build businesses that possess pricing power, and invest in your own education. A currency can be devalued by 50%, but your ability to solve complex problems cannot be inflated away. The economic machine is not broken, it is simply doing exactly what it has done for centuries. The empires of the past all followed this exact same script, and the results were always identical. The middle class gets caught unprepared, while those who understand the machine position themselves to preserve their wealth. The choice is yours. You can remain passive, watching your savings melt away in a broken banking system, or you can adapt to the new world order. If you want to master the rules of the economic machine and track these shifts before they hit your wallet, hit the subscribe button, leave a comment with your thoughts below, and share this video with someone who needs to see this warning. Thank you for watching, and we will see you in the next analysis.